Requirement number 1 is simple, and the IRS is ruthless about it. If you prepare a return claiming EITC, CTC, including ACTC, ODC, AOTC, or head of household, you must complete Form 8867 every year, every claim, no exceptions. On the EA exam, they'll test the word must here. If the credit is claimed, the checklist is required, period. Think of Form 8867 as two things: a compliance checklist and your audit shield. It forces you to ask the required questions, and it also records what you relied on to determine eligibility. That second part matters. If the IRS asks, "How did you know the child lived with the taxpayer?" your answer shouldn't be vibes. It should be documented support tied to the form. Form 8867 specifically wants you to identify supporting documents. For residency of a qualifying child, you may rely on school records, medical records, or social service records, and you should indicate that. For disability, you're looking for a statement from a doctor, other healthcare provider, or a social services agency. Exam tip: they love which document supports what questions. Due diligence isn't just collecting papers. It's making reasonable inquiries when facts don't fit the normal pattern. If something looks off, age, relationship, living arrangement, income, you ask follow-up questions until it makes sense. Then you document the answers. A good interview sounds like who lived where, for how long, who paid support, and what limits apply to the credit being claimed. Now apply it to the disabled adult dependent scenario. Delia is 62 and wants to claim her 32-year-old son, Ernest, plus EITC and the dependent care credit. That age should trigger your reasonable inquiry reflex. The fix is documentation. Delia provides a doctor's statement that Ernest is severely disabled and incapable of self-care. With that support, age doesn't block dependency and certain credits. Colin documents the interview, keeps the support, and completes Form 8867. Your exam takeaway is the workflow. Identify the claim, complete Form 8867, ask the required questions, and record what you relied on, especially for residency and disability. When you see an atypical fact pattern, don't freeze. Treat it like a checklist problem. Inquire, verify, document, then file. That's how you protect the client's credit and protect yourself as the preparer. What is IRC Section 6695, and why does it matter to tax preparers? One option says it's about abusive tax shelters. Another says it's about improper disclosure or use of taxpayer information. Another says it covers penalties preparers may face when preparing returns for others. And another says it's about continuing education requirements. Think about it. The correct answer is that IRC Section 6695 outlines penalties preparers may face in connection with preparing returns for other persons. It's a grab bag of preparer penalties, like failing to sign the return, failing to provide an identifying number, or failing to retain required records. The tempting wrong answer is the disclosure and use rule. That's a real preparer issue, but it's not what 6695 focuses on. Dante was audited, and the IRS determined he claimed the Earned Income Tax Credit incorrectly due to reckless disregard of the EITC rules. How long is Dante prohibited from claiming the EITC, even if he would otherwise qualify in future years? The choices include 1 year, 2 years, 5 years, and 10 years. Think about it. The answer is 2 years. Reckless or intentional disregard of the EITC rules triggers a 2-year ban on claiming EITC in later years. 10 years is the number people remember, but that's for fraud. So if you see reckless disregard, lock in 2 years, not 10.